Let's start off with remittances. The central bank saying our remittances for the year of May, 47% up, sitting at $101 million. Did you expect more, or this is just perfectly fine?
I think this is perfectly fine. We've been seeing a slow increase in the remittances this year, but it's better than what we had last year. So this is a good indicator of the confidence that the Kenyans in diaspora have in their country. And this is also going to just offer more support to the shilling. So it's a good thing, and it's what we expected, and we hope that will be more in years to come.
You know, the interesting thing about this is that Kenyans did not necessarily send more money home. It's just that the transaction fees were cheaper. It's also easier to send money via mobile phones. So overall, this environment around it has necessitated or allowed this to happen.
Yeah, I agree exactly what you're saying, that it's been easier for people to send money through with the transaction fees down. And so people have been encouraged to send more money also. So that has been a good thing.
But overall, this also is another good sign that despite the economic issues, especially in Europe, the UK, for instance, one of the big sources of foreign exchange and remittances, and Kenyans are still sending quite a substantial amount of money back home.
Yeah, we've seen increased from Europe, and North America is one of the biggest diaspora remittances. And this is a good sign, even despite what you said was in the economic front in the international scene.
Let's talk about the currency and the likely impact, specifically after the rate cut yesterday. We saw a bit of support, but can it sustain this? Might we perhaps look at 80 for the shilling against the dollar?
Like you said earlier, 80 might be a bit unlikely at the moment, but we've seen CBK come in consistently every day to mop up liquidity, which is just offering support to the market. Even despite it cutting the rate, we have seen them coming in to mop up liquidity. So to some extent, we would think that cutting the rate would cause a shilling to weaken, but it didn't because of them coming to mop up liquidity on a daily basis.
Come on, just be optimistic and say it's going to go to 80.
No, not for now.
It's not, you don't see it there anytime soon?
No, not for now. I think until we sort out our physical policy issues and until our current deficit comes lower to a sustainable level, I don't think so. Because
there's also that disappointing GDP number from the first quarter. 4.5% is hardly what we expected. 3.5% rather.
Yeah, exactly. That was very disappointing. But honestly, with high interest rates that prevailed last year, at least towards the end of last year, that was expected. And also because the shilling really weakened to lows of 107, so that was expected. We wouldn't have expected GDP growth to be at an impressive rate. And that's why we saw central bank come to cut the CBR rate by 150 basis points so that they can be seen to be having an expansionary economic policy going forward.
Excellent. Let's move on to the securities exchange. The NSE 20 share index down for a third straight day. What is happening?
We've been seeing it rallying through last week, going up and up. But really, that support has been mainly because of two counters, BAT and EABL, which have a significant weighting in the NSE 20. But this week, we've seen profit taken in EABL. And after last week, BAT announced lower than expected growth in their profit. People then decided to take profits because that price did not warrant what was coming through in terms of earnings.
What are your long-term views? And let's start with BAT. After we saw the results last week, what do you feel about the company?
I mean, we were expecting really strong results. And if you'd have asked me before last week, I'd have said we were expecting even 70% rise in first half profits. Because last year we saw really impressive growth in volumes because of their cat rug export. But this year, I mean, that didn't come through, and it was surprising. So for now, I'd like to see the full year results before we can at least see the full impact of the cat rug exports that they've been having. And also, they seem to be really affected by the shilling, and that also came through in their results that they released last year.
How about EABL? It has dominated activity for most of the past few months.
Yeah, I mean, investors seem to be especially foreigners, it's a darling to foreigners, and they seem to be very excited. They also expect really strong results from EABL, despite competition coming in strongly from Submiller, Heineken, and now with Distel coming in to distribute their own products. So I think it's just expecting really, really good and really strong results from the company, even with them getting Serengeti breweries on board for a full year.
How much foreign activity are we now seeing at the market? Yesterday it was about the majority of activity came from foreigners as opposed to domestic investors.
Foreign investment activity hasn't actually been too high in the market because it's only been on a few counters. We've been seeing a lot of local participation in the market, especially because now that they were too overweight on bonds and they were coming into the equity market to ride the wave. So I think going forward still for a while, we'll still see locals buying in most of the counters and foreign participation being limited to a very few counters.
One of the counters benefiting from the rate cut we were talking about earlier is Barclays Kenya, hitting a 7-week high today. What did you think of that?
Yeah, I mean, Barclays has been doing well for the past few weeks, and it being the leading bank to cut its rate was a good sign for it. Of course, it's trying to really push growth of loans, which has really been flat. So I think it's a good sign, and investors took it as a good sign that this may help them push forward their loan book growth.
Overall, what does it say about the rest of the banking stocks listed on the market, most of which are blue chips and are quite favored by investors?
We expect to see them also follow suit in the coming weeks. We expect them to follow suit, but really we don't expect really huge rate cuts because still some of them say that they are holding expensive wholesale deposits, so they really can't bring down their lending rates significantly lower. So, but it will still be a good it will still be a good sign for them to push their loan book growth.
Let's talk about one of the companies that a lot of Kenyans are familiar with and are a little disappointed with its performance in the stock market. I'm sure you can see this coming. Safaricom, still below its listing price. What are market watchers like yourselves thinking about the stock these days?
Safaricom has been really quiet. We were waiting for CCK to ratify reducing the interconnect fees, and that was actually not going to be a bad thing for Safaricom. Interconnect fees doesn't account for a big percentage of their income, so that investors seemed excited at that point. But right now, it's been quiet, not much activity. At any point, Safaricom's price has taken in a lot of the market information. So the price, its fair value is not usually too far from its current price.
All right, we'll leave it there. Many thanks, Brenda Kithinji, with All Mutual Securities.